How long do we want to run this challenge? We want to run it for 1 year, and then we want to calculate what that looks like. And so on a $500 investment, if we were to compound and make a 2% gain every day, at the end of the year, we'd come out at just over 700K. Team, Apex Trades here. I hope you're well. This is not clickbait. This is not something to try to dupe anyone into thinking that this is just something that is not achievable. In fact, I think this is probably very achievable. And I'm going to show you everything in terms of how I think we can go from a fixed sum, in this case we'll use $500, into over $700,000 in just 1 year. And so it's all to do with compounds and how we are going to apply ourselves in a trading environment with 1 trade per day, maybe, with such small gains that are required that over time will compound. And in my Discord server, I've created the Compound Club. This is going to be a call per day where we try to anticipate a 2% move in a bid to, over a year period, make a lot of money. Now we're going to do that. Well, look, over here right now, we have what's called a compound calculator. It's a standard calculator you see, on pretty much most of these typical compound based calculators. Okay, so you might have different values to start with. That doesn't matter, it's fine. But if we say $500, right, and the goal for us daily is we want to make 2% on our gain. Okay, how long do we want to run this challenge? We want to run it for 1 year, and then we want to calculate what that looks like. And so on and that's obviously phenomenal. Now there may be times when we don't make the trade or we lose on a trade, and that's okay. What we're not going to do is revenge trade or do anything stupid, because that's going to be the downfall of your capital. It's always about capital preservation. Okay, and so that might not be, you might not have $500, you may only have $100. What would that look like? 140K. It's still a substantial amount of money for such a small starting balance. And so let's dive in and see how we want to do that, right? But I'm probably going to start with $500. Everyone will have their own starting point. I'm going to start this next Monday. Okay, so the date today is the 23rd of June. It's going to be in my Discord server. Everything that I will be doing will be putting that information out in the Discord server. Again, the link is in the description if you guys want to come over to follow along. Absolutely fine. What are we going to do now? So look, here's the thing, right? If we just start basically and just look at a typical chart, and let's say, in this instance we're going to pick BTC. The important thing about how we need to trade here is about risk management. That's the key term. It has to be about risk management, and realistically I don't want to be losing more than 1% of my total portfolio per day, but I do want to win 2% from that speculation. So if I win 2%, that's a risk to reward ratio of 2 to 1. I can, if I want, go a bit more risk averse and maybe risk 4% to only win 2. That would give us a 1 to 2 ratio, but that means you've got a much higher buffer. And so daily, that might change, but I will provide all that information in the chart, let's just say in the Discord server. And so let's look at how we would think about doing this, right? Let's say for whatever reason, right, I think BTC is going to come and pull back to this 50 EMA here, right? And so I'd say, okay, I'm going to suggest we have a open order somewhere in this region. Okay, we're going to color it white, and I'm going to say long entry. The TA part is not important. This is just a purely illustrative, right? I'm not trying to say this is going to be, the entry and so on and so forth. I'm really only interested in just giving you an example at this stage. And so let's assume that that's going to be our entry. And so what we need to do based upon our risk parameters is figure out what that 1/2% looks like, okay? So maybe I would say, right, in my opinion, I think the risk invalidation, right, will be, let's say, under this low. So I would want that to be a stop loss. Okay, color that red just to make it nice and simple, and I'll call that red here, and I'll call that stop loss. Fantastic. Now I want a 2 to 1 ratio, okay, because that's going to be our 2%, remember. So I need to figure out what is the distance between here and here. Right now it is 0.84 or 2,470 or 247 ticks, right? So or pips. So I need to double that. So I'm just going to make it nice and easy because I don't want to have to figure out the maths. I'm going to do that, right? Okay, so I need that plus that will be my stop, my take profit, right? Nice and easy so far. I think everybody is following. And so if is the keyword, price comes down and hits my entry, let me just call this take profit. I know that that's a 2-to-1 ratio, right? Perfect. So we've got our value and we've got our stop value, we've got our long entry value. What we need to do now though is figure out what position size we need to add on a $500 account or a $100 account or an $80 account, whatever it would be. Figure out what that needs to look like, okay? And so we're gonna just pop back over to the calculator page one quick second and then skip to this page, information, right? That's key. This is the key part of figuring out. So let's just say BTC. Okay, let me just double check that. Is that right? So BTC. And by the way, I'm not just going to trade BTC. I will trade any altcoin that I like the look of. So we have a total capital of $500, and we want to risk 1%, okay, for a 2% win. And so just to figure out what our values are, we have an entry at 29,699, okay? Entry 29,699. To be exact, it's 0.8. We want our stop loss at 29,452.8. 29,452.8. And we want our exit, which is effectively our take profit, at 30,193.8. Perfect. Okay, and it will be a long leverage. Right now we just need to make sure we're going to use cross mode. There's a few important rules I'll go over at the end that you just have to make sure you're doing, but for now what we need to know is what is the minimum amount of leverage required to make the margin, right? And so on a $500 account, risked capital is only a $5, but I will make $10. Now 2% on $500 is a $10 gain. Now that's great, because let's say today we make this trade and the trade wins, we are now operating with $510 capital rather than $500 capital. And what that means is on the second trade, that 1% is slightly more than what it was yesterday, and so on and so forth. And that's where you get this compound effect of that 2%, you know, based on that compound calculator. And so this tells me what my position size needs to be relative to whatever the value is between the stop and the entry, or the stop loss and the entry. Now my stop loss, I need to know, because of fees, because we're working on fees in terms of the central exchange, you can see I need to make sure I have the margin available. And you can see right now, if I only go 1x leverage, the margin's low. And so I just need to bring my margin slightly above so that that margin goes white effectively. Now that means I can put a 2x leverage on, which from a fee perspective on a central exchange is not going to cripple us, right? If I do an 100x leverage, well, it doesn't really matter because it's all relative to position size, but I'm going to pay more in fees for that benefit. Remember, the position size does not change. It's relative to the risk versus the capital, okay? And like I say, once we start this challenge, which will be next Monday, I am not gonna expect you guys to have to come in and put all this information in. I'm going to be putting this information in the server myself, so you'll know exactly what that is. Where it will change for person to person is understanding what your total capital is. And so, you know, as part of this, you'll just need to become familiar with this information. Easily for you can actually just give me what your total capital is, and I can tell you what your position size needs to be anyway once you join the server. All of this is absolutely free, by the way. I am not charging for any of this. I don't believe in doing any of that nonsense. It's really just about education. Okay, so we're now clear. Okay, we're clear on what we want to do. Now, let's just say, as an example, if I go back, so at my position size, when I use ByBit. If you guys haven't got an exchange, it helps me. Please go and use my affiliate link. That is also in the description. But if once you go into the exchange, all you're going to put in is your position size. That will be all you need to do, and you're going to put your leverage at 17, or not 17, but it'll be 2x actually, wouldn't it? You'll put your leverage at 2x just because it gives you enough margin for the trade, and you're going to put your position size at 0.020. Right, now let's say if I go back to the chart one quick second, where this gives us a little bit of room to play is if let's say here right now, my take profit obviously is 2-to-1 ratio of my stop loss. Now, let's say I wanted a bit more wiggle room, but I still wanted to maintain that profit. I could extend that risk to reward. So I could say, actually, I want to do a 4% risk. So if I go back again to the chart, if I go back to here, I've now got a 4% risk, right? 4%. My margin is now lower, so I have to bring up my leverage to 5x to make sure I've got the margin to make the trade, okay? But now I've got a 4-to-2 risk to reward ratio. So what I can theoretically do to give you, it's always going to be about probability of the trade right now. Obviously a 2-to-1 is harder to get than a 4-to-2. And what I mean by that is if I go back into my chart again, if I now say, well, okay, if this distance to here is 2-to-1 of the take profit, but I want it to be a 4-to-2, what that means is the distance between here and here, sorry, I have to do it in this way. There's probably a better way to do it actually, but like that. So I want to do 4 of them, okay? So let's do that. It's arbitrary. It's going to be rough. It doesn't have to be perfect right now. But you see now I can bring my stop right the way down here. And so you would assume, if I delete these, that is now much more in my favor. Of course, I stand to lose more. I stand to lose 4% rather than 1%. And that's the risk that we can kind of determine as we go. But equally, it's a much easier trade. I mean, I can theoretically draw down on this trade right here. You know, if price comes into here, down to here, and then starts working its way back up, you know, that's a trade that would be our 2% for the day. If not, if I had my, you know, if I had my risk to reward, which was 2-to-1, say roughly about there, well, obviously I've been stopped out, and that's a 1% loss on our account. That means we don't trade for the day, we don't revenge trade, we go back and we wait for the next day. And so that's just something that is important to understand when we're factoring in these trades. Now, I will obviously, as I'm determining which trades are going to be relative and which ones aren't, I'll have a better understanding of what I want to do. Now, realistically, what I can also do is extend that down anyway as a, you know, a risk to reward ratio. But remember, it's always going to be relative to position size. So it's important for me that the position size always gives us that 2%. And so if I bring that stop loss down there, for me to get a 2-to-1, then I have to bring my, you know, my take profit up here. So that would still be relatively based upon a 2-to-1 ratio as a 1% risk, but a 2% reward. But it's a much harder target because the, you know, the take profit and the stop loss are much further away. It's relatively the same in terms of the cost outlay, but that becomes, and so basically the movement of these two is relative to that risk to reward ratio. So I'm always looking for a 2-to-1 or maybe a 4-to-2, something like that, and that will all be dependent upon how well I think we can execute a trade. And so that's basically what we're going to do. I'm going to do 1 call per day with the ambition of compounding each call. A 2% move is not too difficult. It's not crazy. You know, you don't need to be going mad with capital. Now, a 1% risk, as let's say you have 5 bad days in a row, well, each day 1% risk gets lower and lower for your capital size, because obviously as your capital is decreasing, 1% of that capital is less than, say, you know, if you were winning. And the reason the compound side is really powerful is that 1% when price is going for you is beneficial. When price is going against you, it's not as bad because the capital gets lower. And so that's why this is such a really good kind of challenge that we're going to go for. It's going to be a year-long trade, once per day. And so the link will be in the Discord server. If I just nip to the Discord server really quickly, you can see exactly what the plan is. And so right here, what is the Compound Club? Welcome to Apex's Compound Club. This challenge is 1 year. We try to make 2% daily gain using the compounding method, starting off with a fixed sum. In this example, we'll assume $500. In 1 year, if this was possible, balance at the end would be circa 700k. With a 500 start, your first day you would have to make $10. That's exactly the example we went on. On a 2% gain, that would be $510, again, as we've just described. The way this would be managed is if you have a trade that achieves more than 2%, and this is a good point that I hadn't raised, is our take profit does not necessarily have to be that 2% gain. In fact, what we could do is manage the stop loss so that if we go beyond that 2%, our stop loss we then bring up at that 2% gain, meaning that we've locked in a minimum of 2% gain. Because sometimes we're going to get better trades that just act as runners. However, we will always make sure that the risk management side is always kept on check. I think that's an important point to make. Rules of engagement. It is important to stay focused on the risk management side as to not revenge trade. Again, I was explicit about that. So if you're not able to make 2% on the day, the next day you don't try and make 4%. 2% will always be the goal. Myself, and along with anyone within my team who wants to make these calls, will also make them in the Compound Calls. That's a separate channel which we'll be making those calls in, and we'll be starting this very soon. This will be on the 3rd of July. It'll be Monday, the 3rd of July. We'll be starting starting the first compound club call. And so make sure you guys are in for that. The trade plan will be to trade until you make 2% or lose 1%. Once this happens, either way, you do not trade this account until the next day. To keep this clean, I suggest you open a sub account purely for this trading style. I think that's a really good point. We need to keep this separate from any kind of other, account that you have, whether that's some sort of a degen account that you use for high leverage or whatever, or, if you've got it for some sort of spot. This needs to be kept completely separate. We'll be trading futures on derivatives, and so that's going to be key. And then just lastly, for a bit of fun, here is the compound calculator again. Once you join my server, you can just access this calculator, input what your fund will be as a starting bag, and then we can look at what that looks like over the course of the year. So it's going to be fun. Anyway, I just hope you guys see you in the Discord server. We have a lot of good stuff going on at the moment. We also have the 10x club, which is to 10x starting capital, as well as the compound club, which is starting next week, as I say. So that being said, I will leave this one here. This isn't fluff. This wasn't clickbait. It's a genuine attempt for a year's worth of trading to go from a fixed sum to multiplications of that value. Okay, peace out.